So it's great to have Jamie here. Jamie, welcome back to Face. How are you, buddy?
Hey Dale, good morning. How are you?
Good
I'm well,
morning, bro.
thanks.
Things are okay. I think it's a great time to have you here. Um, why don't we start with tariffs? Because they're going to start Monday. What are your thoughts on how it may impact uh, the economy? Uh, is it are inflation rates going to go up, and is there a chance that besides the markets being weak, that after this growth scare, that the Fed might be forced to tighten?
Well, who would have thunk it? I mean, it was only a few weeks ago we were, we're looking at rate cuts, quite heavy, a heavy dose of continued easing after a pause. Then we were back into the sort of stay on
Yeah,
hold, pause territory. Now we had a couple of Fed officials yesterday. Harker, I think, was one of them, and Schmid, Fed officials saying that the Fed can move in either direction, up or down, and that they're less convinced by the slowing in inflation. So we've had kind of mixed signals from the Fed. Powell's still very much in the camp that policy remains meaningfully restrictive. I think that's the kind of
yeah,
catchphrase right now, is meaningfully restrictive. So it depends where Fed officials fall on either side of that. If they think policy is meaningfully restrictive or less or more, that gives you an indication of the way they're thinking. To
yeah.
be
It's
honest,
kind of a minority narrative now that rates are going to head up again. I think
it's very much
everyone,
minority, and it has been. And I mean, let's get this clear: it has been a minority view, but that
yeah,
minority was sort of expanding and shrinking as some of the data came in. I think we're getting mixed signals from Fed officials because we're getting mixed signals on the data. I mean, look at the consumer confidence
yeah,
taking an absolute plunge.
yeah,
Some of the activity indicators, PMIs, ISM, are really starting to sort of flash, if not red, and certainly amber. And the
okay,
claims data from yesterday, that may be DC related or driven, but claims are starting to spike up as well. So there are reasons to be cautious on the economic front. And so you're talking about maybe the Fed's next move might be a hike. There's an equally cogent case to make that recession risks are now on the rise again, albeit from a very
okay.
low level. So it's very much a mixed bag, and a lot of uncertainty. There always is, but it feels like especially so now, given the political environment and as you're saying there, the outlook for tariffs, which. I mean, I think let's be honest. If you're an investor with a 3 month plus horizon on a business, which your horizon will be that and more, your visibility is next to zero.
Yeah. Yeah, I've heard that, until it's clarified, which, there's always tweaks and changes and reversals. And uh, I think that we'll see it Monday. But even though we have that Monday, there'll still be, I still think there'll be negotiations going on even after tariffs are in effect. Maybe they have to be in effect for a while for things to change or they accelerate. But
No
I'm
doubt.
looking.
I
Go
think
ahead.
you're spot on there. I think you're spot on. There will be negotiations. There'll be constant negotiations, and I wouldn't be
Yeah,
surprised if we get something on Sunday evening saying tariffs are on hold for another month while we continue talks. I mean,
yeah, yeah,
nothing's off the table.
yeah. That's what makes it hard to be a position trader. I mean, it's really difficult. But we've had let's talk about the potential of recession, and let's go like to Walmart's or warnings that uh, they're expanding market share with the affluent, which
Mhm.
means to me that even the people that are loaded with assets and real estate are starting to watch their dollars.
What's their pennies or their cents? Yeah,
Yeah,
I mean that's another one actually. That was a big one. That was a big, as I say, if not a red flag, certainly an amber flashlight that flashed from the Walmart earnings.
Yeah.
Where maybe you might think where Walmart goes, the economy goes. Not Ford anymore, is it? But it's
Yeah.
Nvidia or Walmart.
Yeah. So,
Um,
yeah, and
so yeah.
their credit cards are pretty maxed out. Majority of, you know, the lower
Mhm.
60% of
Although
consumers.
I don't know if you saw, I think it was last week or certainly earlier this week. Moody's Analytics and Mark Zandi, the economist there, he had a piece that
Oh,
went
yes.
that travelled quite well and got quite a lot of play. Just noting that 50%, around half of all US consumer spending, is now accounted for by the top 10%. And that's a record.
Wow. Okay.
So
Yeah.
I mean that kind of that disparity has been growing, but it's now the top 10% of earners account for all of half of all consumer spending. So if they start to retrench, as you're saying, maybe watch their pennies and their dollars, and certainly if the stock market continues to head south, they will be watching their spending much more closely. Then
Yes.
consumer spending could be in for a bit of a rocky ride. And again, especially as I just mentioned there, the latest consumer confidence numbers, they took a bath, and I think it's to do with uncertainty around tariffs, and maybe some of the hiring and firing on government
Yeah.
payrolls. Well, more firing than hiring, obviously. But so the uncertainty levels are high, and I think that's seeping into the survey data, and it might not be long until it seeps into the spending and hard data.
So, besides trying to manage inflation and employment, all of these changes in policy make it even more difficult for the Fed to make decisions, correct?
Absolutely, and I think Powell himself has said that, and he's been quite clear that I think that's part of the reason they were on the, or that they started their pause. It was because of the high levels of uncertainty, and that kind of makes sense. Um, but if you zoom out a little bit, I suppose the uncertainty is high, the day to day noise is loud, certainly. But you just mentioned unemployment and inflation there. Inflation today we just saw came in at what 2.5% on an annual
Yeah.
basis.
Yeah.
That's not bad, I think. But in anyone's book, 2.5% is reasonably close to target. And unemployment, where are we? 4.1,
Yeah.
4.0. Again, in anyone's book, that's not too bad. That's not to suggest that things are rosy and everything's going to stay that way for, into the future. But right now, I suppose on a very broad macro level, things are reasonably stable. However,
Okay.
not without rising risks.
A lot of people are having a hard time finding jobs. I've heard this jobs market described as a frozen jobs
Mm,
market. So, people are sending out hundreds of resumes. A
mhm.
lot of them are to, the companies advertising they need help to show that they're busy. It's more of a PR thing than them really looking for people. And because
That's
of
interesting.
the great resignation fears are still there. So
Mhm.
they have fear of letting people go. But as far as getting a new job, it's a struggle out there for for everyone, I
Well,
guess, unless you're
if that's the case, that should definitely start to show up in the hard data. As I say, claims are starting to creep up. I think the jobless claims are the highest since October, if I'm not mistaken. That's pre-election, obviously. The JOLTS numbers should start to show that as well. And of course, do we have payrolls next week? I think next week we have
yes, we
payrolls.
do. Yes.
They may not capture the latest wave, but they might just give an indication that that ball is starting to roll. So
We
yeah, I mean,
also
if
yeah,
unemployment starts to rise, there's no question, and I think I think last time I was on a few months ago, we spoke about it. The Fed was
we did.
looking more at unemployment than inflation as its sort of lodestar, if you like, its guiding light for where to go on rates. And I think if you
Okay.
start to see the labour market creak, given the sort of nervous economic backdrop, then I think we could see the Fed maybe start to ease again.
April, what meeting do you think
April.
they'll make that move?
Well, where are we looking at? We're looking at June, July. If you go by SOFR
Okay.
and rates futures, But that's been
Okay.
coming in a bit, hasn't it? I think only a few weeks ago, or about a month ago, we were looking at September for them to start the rate
Okay.
cuts again. So we're now coming back bit by bit. July, now it's June, and I was
Okay.
just looking before I came on at the curve going into next year, and we're looking at almost 3 quarter point cuts by this time next year. So 50 by the end of this year, and maybe another one in the first quarter of next year. So that kind of anticipation for more easing is starting to build again. Certainly,
Okay.
I saw some people on Twitter the other day saying that the Fed could come in with QE if recession fears really start to take hold and unemployment spikes. They could do QE in the next few months. I think steps like that are that would be quite dramatic, and I wouldn't expect that. But certainly, a rate cut in April is not off the table.
Okay. Well, let me ask you this. What are your impressions? This happened quick. Really, it started Friday. Okay. So, really in a week, look at what's happening
Is this the
in
S&P? Yeah, yeah.
yeah, and the Nasdaq, and is the AI trade dead? We had Nvidia earnings, and it looks like it's in trouble.
Nvidia,
Here we go.
I think what was the share price fall yesterday? I think it was about 8%. Nvidia
Yeah,
fell
there's a
eight and a half
picture.
percent.
Yeah.
Doesn't look
So
great, I
this
suppose.
this
Close to
was the
support, looks like.
yeah, this is the earnings candle. Okay, where we were all over the board, and then the failure with the rest of the market. Yeah,
Hmm.
I mean it could bounce, but I think
Hmm.
it's not healthy that it's all the way back at that support zone. Reminds me what the S&P said. If you test support too many times, Jamie, it's like putting your shoulder into a door, and it may
It's going
not
to
break.
go. It's going to give at
Yeah,
some point.
yeah. You have to maybe hit the door 3 times, like S&P's 5920 held, 5920 held,
Mm.
5920 held. Eventually,
And then
the
it
door
didn't.
the door breaks. Same with Bitcoin. 92 held and held and held. And I want your impression on Bitcoin because there was a lot of fanfare about having a president, probably the first president that I can remember in my lifetime, endorse an asset class. And so here's the same thing when you knock on the door. This took several attempts to break down. But
Is Bitcoin now down about 25% from its peak? Is that
yeah,
right? I heard
yeah,
that.
yeah,
I mean, that's a big move in anyone's book, but
yeah,
maybe not so much for Bitcoin. We're kind of used to some of these big price moves, aren't we? And I
yeah, it
think Blake
might
was
be a
saying earlier
buy.
that it could be. Yep.
Yeah, it might be a buy. You have a view on the dollar? We have ECB next week.
Well, just going back to the equity market, I think we're
Okay.
at a very delicate juncture, as you say. We seem to have
Yeah,
broken short-term support, and it seems to be led by tech, AI. I mean, not only in Nvidia, their shares are taking a bit of a bath, but again, I was looking just before I came on Tesla. Tesla's
yeah,
down more than 20%, nearly 25% in a week. Now, I know it was maybe overstretched and overvalued, for various reasons, it was trading very, very high. But talk about big moves like that, and it's taking down the Nasdaq. The Nasdaq's down 5% for the year in the red. This seems to be gathering momentum, and the broader market is being held up by rotation plays and moves into other
right,
sectors. Like the Dow, for
right.
example, is hold up. The Dow's probably around about flat for the year. But as you say, if you bang on the door often enough, it will start to give. And I think if this tech sell-off continues, and there's still a lot of potential for it to continue, given how much it rallied in the last couple of years. Nvidia, for example, I think Nvidia shares are up in the last 5 years about 1,800%.
Yeah,
So
you're right.
and
Yeah,
that's been justified by strong earnings, no question. But there's only that growth in earnings and that margin that just can't last. And I think the reaction to this week's earnings shows that despite reasonably good numbers and a reasonably decent outlook, I think fatigue is certainly starting to set in there. So, I mean, could the equity market fall continue? I think it might do, and if that does happen, the yields continue to fall, and maybe the dollar starts to come off even more, because the dollar, as you were saying earlier, it's still pretty punchy on a sort of broad level.
Yeah. Yeah. So
And
it's
there's
yeah.
room for the euro, for example, to maybe pick itself up, because only a few weeks ago, a couple of months ago, we were talking about maybe 3, 4, 5 ECB cuts to come and recession in the eurozone. But now we're getting more defence spending in Germany and the rest of Europe,
Right.
maybe a peace deal in Ukraine, and so that's kind of lifted the euro up away from parity. And if the ECB doesn't cut as much as expected, and we've had ECB officials saying in the last few weeks that policy is probably maybe more balanced, not quite as restrictive as they thought it might have been, then yeah, I think there may be a bit more upside for the euro. In fact, some of the big banks on Wall Street are starting to revise their calls for the euro. Those parity calls are starting to melt away a bit, I think.
Okay. Well, that makes me want to be short till I hear parity calls again. But
If the
and
consensus is saying go long, then maybe
yeah,
the short-term traders to go on the
I'm
other
I'm
side.
because I'm bearish a dollar, but this is a minimum of correction. But if we start getting over 108, then there's something else going on, and the euro can hold here, or even retest, go back near the lows around 102, and this is just continuing to base build. So
Well, the
a
dollar
lot's going to
is,
have to
by
do
any
with
measure,
risk.
I
Yeah.
think by any measure, the dollar is, again, on a broader perspective, not just on an intraday, but on a wider perspective, on a time horizon, the dollar is pretty punchy. On a nominal effective exchange rate, real effective exchange rate, all these kind of measures, the dollar is strongest in actually in decades on a real effective exchange rate. And we've heard, Treasury Secretary Bessent and
Yeah.
Trump give his signals that, I mean, they clearly want the dollar lower.
Right.
And that's despite the lip service to strong dollar, etc. And they clearly want the dollar lower to boost domestic manufacturing, etc., etc.
Right.
So, does the market take it there, or is the market forced to take it there? I think we may be in for a period of, if not weakness, and certainly sort of not much more upside in the dollar, if the
Okay.
Treasury gets its way.
Yeah. Well, I still say I'll be trying it up here for a short. We'll see, but we get over 106.70, something else is going on. I think it's mainly going to be influenced by risk. I think that was part of the move in the dollar yesterday was risk off. So the
Well,
surprise.
look where the 2 year yield is. The 2 year Treasury yield is now down to what, 4.05%. It's getting down to
All right.
4%.
So let's talk about that we're reinverting. What
Yep.
does that mean to you? Second time.
That's a classic sort of slowdown slash recession signal, isn't it?
Yeah.
If they get that, doesn't really matter if it's a bear driven by a sort of bear move or a bull move on the curve. But yeah, if the 10 year yield is coming down pretty sharpish, where are we in the 10 year? 4.25 now. It
Yeah.
was only a few weeks ago, about a month ago, we were at 4.80, and top was a break above
That's right.
5%. So these are pretty consequential moves
Yeah.
on the
So
10 year yield.
yeah. So the question is this the beginning of? You think 10 years are going to head down towards under 4%, back towards 360?
Well, where would you put the next 25 bips move in treasuries from here? We're right on 425. Are we looking at 4% or 450, do you think? Given
I'll
the
go
risk,
with
as you say, given the
I'd
risk.
go I'll go with 450.
450.
Yeah.
So that would
Because
require inflation to sort of not go much lower, to pick up, maybe for
yeah.
growth activity data to hold in and maybe pick
Yeah.
up.
Yeah.
Yeah, it's reasonable. But I
Yeah.
think it's equally reasonable that some of the numbers we're seeing,
I
we get a few more of them, and we
well
start to head down
you
towards 4.
you put a gun to my head, and anyway, I have no position in here, but
No,
I wouldn't.
but that's very consequential for the dollar, isn't it?
Yeah, it really is. So that could be part of it. We get a pop in yields and the dollar recovery continues for a while. We'll see.
Yeah,
The
yeah. I
yen
think
is
think that yeah, and the
the
yen
yen.
is a fascinating one, isn't it? As always.
Look at that, Jamie. That 148 level. It goes. That level is held for. It's been very significant for months and months and months. You know, they were starting to talk about, you know, where yields went on the JGBs, but what do you think? Um, most people are pretty negative on this pair, just like they're looking for rates to continue lower. And the yen is saying maybe something different, that maybe that's why the 10-year could pop to 450. What do you think?
Sorry, just before the end, there's a good point just came in on the chat about month-on-month inflation will drop because oil is down, and I think yeah, I mean, oil prices.
Yeah, okay.
I know we're in the digital tech AI age, but inflation is still driven, to a large degree by energy prices. And
Okay.
oil has come down a lot in the last few weeks. And it's I don't have a chart in front of me, but it may be lower year on year as well, which feeds into inflation rates.
Lower
So
you.
that's just worth keeping an eye on as well. The fact that
All
oil
right.
prices have dropped. As for the yen, I think one of the most interesting notes I saw in the last few days or week or so was from Bank of America on dollar yen. They pointed out rightly that real yields and real rates in Japan are still deeply negative,
Negative.
especially policy rates, because inflation is now, I think, headline inflation on a national basis is 4%. And with a policy rate of 0.5%, hey presto, doesn't take much to work out that the real policy rate is minus 3.5%. So, so your return in Japan is still deeply negative, and even though yields have spiked, 2 years and 10-year JGB yields are up again against 4% year-on-year inflation, then you're still getting a negative return on those bonds. So their point was, dollar yen is it may not be the sort of downward one-way path down that you might expect. In fact, they changed their forecast. They raised their dollar yen forecast for the end of the year to 165.
Wow.
So what do you think of that? 165 again, as we were,
That that's
you guys were saying
that's
earlier,
like
you would
the
have
old.
to get. It's the old high, isn't it? Is that not the old? Well, that would be a new
Yeah,
high, I
I
think.
think, well, yeah, 165, and that means rates. I'd have a hard time seeing, you know, the yen do that. 165, yeah, the high up here was 62. So
Yeah.
they're
So
talking
we'll be
about it.
breaking that. Yeah, breaking a
A
new 35-year high, I think.
Wow. That's a contrarian call, isn't it?
I think it is, but it was an interesting one because so they were basically highlighting the negative
Well, all right.
returns on Japanese
Well,
on Japanese bonds,
okay.
and so
Well,
if at
then
165, it's a bold move.
all right. Well, if we're going to 165 in the yen, we're going to above 5% in the 10-year. It would be my guess, unless that correlation completely breaks down. And I
Hmm.
don't think so.
Yeah,
It's
yeah, no,
still,
it's unlikely. It's unlikely, but I think the markets have thrown us a few curveballs in, in the last few weeks, months, and years, haven't they?
yeah, give me a fastball down the middle. Can you do that, Jamie? Set it up
No,
for me. Anyway, Jamie, it's always a, you know, great talking to you and getting your views. You straightened me out on a few things here today, and I want people to follow you because you know, being in tune with the things that you say can help, you know, their narratives. And like today, I was saying some things, and you gave me the other side of the coin, and it makes
Well, I think
people
it's
think.
it's always good just to sort of be aware of what the other side of the argument is. We all have our views, we all have our biases, etc., and inclinations towards where we think things are going. But there's always another side. There's always
Yeah,
another side of the trade, as you as a trader will know. But and behind that, there's always another argument.
yeah. Look at this. So Jamie puts out some nice charts, shows the breakdown in the Nikkei. So you know, go to at Reuters Jamie and follow him. And you know, if we go to Reuters, where would we Is there any way for us to find your commentary or anything besides just here on X?
Just on the website, on the Reuters.com website. And I'm going to start posting as well on Blue Sky in the near
Okay.
future.
All right. Is it growing with what's
I think
happening
so.
with Musk?
Haven't
Yeah.
I haven't started posting on it yet, but from what I can see in here, then yeah, it is it's certainly growing a following.
Okay. So now we even so there's Fox News and CNN, and now there's Twitter and Blue Sky.
There's everything. There's no
Everything
shortage of platforms.
everything's what team are you on? Anyway, the team I'm on is for everyone who hears my voice not to get hurt in the market, but realize that's a risk and not to make the big mistake and to be patient and look for trading opportunities with measured risk. So that's my mission. And you helped me accomplish it, Jamie, by coming in and giving us some stuff to mastermind with. I want to thank you, buddy.
I appreciate it. Thanks for that, and thanks for having me on, as always.
All right,
Glad,
Jamie.
glad to be here.
I hope you have a great 2025. You and I'll talk in May around my
We will
birthday.
do.
All right, buddy.
Looking forward to it. Have a good
All
one.
right.
Take
All
care.
right. Thank you, Jamie. Jamie McGeever, everybody at Reuters. Jamie, guy sharp. Uh, Need to follow him. I hope everyone had a decent week. John Irving, I hope you have a great weekend. It will accelerate. Okay. We'll see. Okay, everyone. David Blaylock, new name. Everyone, listen. Do your work over the weekend so you're prepared to execute instead of analyzing on the fly. Because if you do that, you won't impulse trade, which is the enemy of the trader. And I'll say it one more time for those of you that are here. And you see my shirt and it says hope. Okay. Hope is the oxygen in our life and the carbon monoxide in our trading. And yeah, maybe I'll get a haircut this weekend. What do you think? Think I need one? Saloom? All right, everyone have a great weekend. Remember, don't just count your pips, count your blessings. People enjoyed you, Jamie, and we'll see everyone Monday. Thanks, Sinatra. I don't need a haircut? Okay, I'll leave it. All right. All right, my band and I will keep it long. See you later, guys. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.